Today, we are breaking down the cattle markets. Happy Thanksgiving, everyone. I hope that you are having a wonderful day with your family. Today, we are bringing on Dan and Samantha once again to break down the cattle markets, what is happening in the world right now of commodities, live cattle, and current events. We have quite a bit to talk about this week. From the last time that we talked, we had the Lexington plant closed down through Tyson. We have some news on Brazilian beef. We have some news on the cattle on feed report. There is just so much to break down in today's episode. Dan and Samantha and I do all of that for you guys. And I hope that if you're listening to this on Thanksgiving, that you are able to sit back and maybe enjoy a steak instead of some turkey today. But if you are enjoying turkey, I won't judge you too much. I hope that you guys have a great rest of your day. Thanks for listening to another episode, and let's go ahead and hear from Dan and Samantha on their thoughts on the cattle market. Dan, Samantha, welcome back to another podcast. How is life in Western Kansas and Iowa treating us this week?
Pretty good. Gonna see some drops in temperature next week, mostly highs of 30, so we're getting right in winter here.
How about you, Dan? How is life in the corn state?
Windy yesterday at 5 o'clock. There's no corn standing in the field anymore because it'd all be flat today. Winter's here. Yep, it's time.
It is time. It is time. I've got all of my sweaters out. I put away all of my warm weather clothes when I got back from my trip. It is here. So I gotta love it. Gotta love it. Well, what's happening in the markets this week, guys?
Well, I think we have some really big talking points to cover today since we last stopped on here. It's only been a week, but with everything going on, it seems like it's been a month. So, you got the removal of the Brazilian beef tariffs, Tyson's announcement of the closing of their beef processing facility in Lexington, plus a cattle on feed report that came out last Friday that kind of got overshadowed there in the mix of things. So I kind of want to hit on that a little bit before that gets pushed to the sidelines. But overall, I don't think it was too painful that we've got, Dan wishing for another government shutdown over here. I was surprised to see cattle on feed pass estimates. They came in at 98.7% of a year ago versus that 97.9% that they estimated. So not bad. Really, the big picture of this report for me, we placed more than we killed. Significantly so. I mean, by 342,000 head there in the Northern Plains. So that being said, I'll get right into it. I mean, with those numbers, it really is hard for me to justify that Nebraska plant closure based on tight supplies. I mean, yes, our cattle numbers are low, but you got to also keep in mind, Iowa and Nebraska placements actually came in higher than last year's, and there's been a backlog of fats in the North for months. I mean, this isn't the first time that we've seen packers cry tight supplies. We've seen it before, even when they were far better off on cattle numbers than we are now. And that's even when slaughter numbers were up. So I won't beat around the bush. I think a lot of it was market manipulation. I think it's monopolization. And unfortunately, I mean, they succeeded. We were limit down on Monday, immediately after the board opened up. Cattle feeders are taking lower bids this week, seeing 207, 208 on your negotiated fed cattle trade. And I mean, that's what happens when you've got four big companies controlling 85% of the market. We've seen what they're capable of. There's been a lot of lawsuits come to head, this year over them price fixing pork, beef. $140 million was paid by Tyson just this year. And as huge as that number sounds to us, it really doesn't make the slightest number of dent in their revenue. So, matter of fact, Tyson's revenue as a whole was actually up 2.1% this year. And that's just Tyson. I mean, we're not even talking about the three other major beef packers. I mean, heck, JBS came out with record high revenues last week. Bottom line, I think they're going to drive up beef prices, cattle prices lower, and not only will they save money doing that, but they'll make more money on what they kill. So I think a lot of people have kind of resorted that Tyson's inventory from Lexington will be rerouted to North Platte, U.S. Sustainable Beef Plant, smaller localized plants that are dotted throughout the area. I think that'd be great if we can shift these cattle to local owned processing facilities than one of your big four. But I think lower slaughter capacity could be a concern if we don't have more of those available. So that's also, keep in mind, that's only available if these feed yards aren't in an AMA contract with one of the big four. I mean, meaning they committed 100% of their inventory to one packer. So that being said, what happens when these feeders have an AMA contract on it and the packer doesn't show up? I mean, they've got market ready cattle backed up. Could that be part of the backlog in feeders in the north? I mean, it could, but I think really the point of this, it goes a lot deeper than meets the surface. So also something to keep in mind, Tyson has a processing plant under construction in Amarillo. I honestly wouldn't be surprised to see them build another one in the next year or two. I definitely wouldn't take this closure as news that they are downsizing or anything like that. They aren't going to just hand over that market share on a silver platter and welcome in this extra competition. So I'm sure they've got something in the works. But moving on, you've also got the most recent 40% tariff removal on Brazilian beef. So as those cheap imports start to funnel in, I think that's going to give the packers more leverage in the markets. I realize most of those cuts are going to be your grinding cuts for burgers and ground beef. But the packers, I think, are very likely to mix these cheap imports with our quality product, slap a U.S. label on it, market it just the same. But I sure as heck isn't going to bring down beef to the consumer. Really, the only people that have seemed to caught the brunt of it are producers. And, we don't get a dime from beef unless you're buying it completely direct, and most people aren't. So, really, big picture, cattle values have fell 20% off their highs. I know beef isn't 20% cheaper in the store, so it doesn't make a lick of sense to crash our market. That being said, the fundamentals are still very much in our favor for the market to pull out of this. Domestic demand's very high. Our cattle numbers are still drastically low. That hasn't changed any, not yesterday, not in the last month and a half, in order to justify, feeders falling off $80 a hundredweight or fats to fall off $40 a hundredweight. I don't know that we will get back to the highs that we were at, but I think there is huge potential for recovery. But that being said, the board sets the basis for cash. So the futures market has to stabilize and find its footing before cash is going to. My question at this point, and I'm sure everyone else's, where's the bottom of the market? Is the media, the presidential administration, the big four, are they going to throw more bearish news at us? I mean, I don't know. I wish I did. The fact that we are asking this question, I think, is very frustrating in itself. And really, the only accurate way I can answer that is with a crystal ball. I mean, I don't know. But that's what we have Dan for. So, Dan, what do you have for us today?
You want the good news or the bad news?
Give it to us all of it. Give it to us straight.
If I look back at the last month, 5 weeks, whatever you want to call it, the government's basically telling us we have to become competitive with the rest of the world, with South America. I mean, obviously, if you look at Australia's prices, we're very, very competitive at the retail counter, but South America, wholesale, we're not. They can beat us up and down, hands down. They're the cheapest place to raise it. Their costs are not as high. Obviously, we don't want to turn into South America, and I think that's a poor decision. But if you're going to bring meat in, you're going to shut down plants. They're telling us get competitive, or you're going to get out. So that's big picture. I'd like to give you a glimmer of hope and be optimistic because we have sold this market off a long ways, and it's very common to see us get a bounce. I know there are a lot of producers. I can hear it on the phone when I'm talking to them. There's a lot of producers waiting for that exact same bounce to get coverage on. That makes me very, very nervous. In the last week, I should say in the last 3 days, there's been a lot of producers take profit on hedges. The term we've talked about before is a dead cat bounce. In the last 2 days specifically, we've seen that dead cat bounce. Open interest drops in a market that's stabilized / went higher. That's not bullish. You don't have strong new longs coming into the market. You're just getting out of hedges. That's very, very scary. There is the potential that within trading this week, guys take profit on hedges. They've been upside down for, a year on a lot of these hedges. All of a sudden you get close to a break even. Hey, let's take some of our money back, right? Like I said, it's coming through the phones. Okay, so then what happens when managed money comes back to work next week between these next two, between Thanksgiving and Christmas, and they're like, oh shoot, the government's still fighting beef prices. Let's get out of our long positions, and the potential is more down in this market. Very, very concerning. More than a month ago, I mentioned in one of our newsletters that I was running out of things to be bullish about. It took the perfect storm, that 7 things to drive us to those insane 240, 250, cash bat futures, same way, 380 in the feeders. It took all 7 of those things in that 5-year timeline to make that happen. Well, we ran out of things bullish to throw at the market. As some say, you got to feed a bull every day. Now we're sitting here and everybody's asking the question, when are we going to run out of bearish things to throw at this market? Well, on one hand, I could tell you we don't have to run out of bearish things. We just have to run out of bullish things, and we might continue lower. On the other hand, I still have more bearish news in my pocket I'm waiting to hear. So if you want the bad news, I don't think it's over long term. Short term, we still might get that bounce, and I'm really, really hopeful we do for producers that are grossly uncovered on calves, on yearlings, on fats, because plain and simple, it's a shit show. I mean, you're coming into the first, second quarter, and you got break evens that are going to start pushing 250 in fat cattle, and we're trading sub 210 here today. I just saw one come through. It looks like they upped their bid from 208 to 210. It's still down on the week, compared to last week. So it's a mess. Once again, and I've said it 100 times if I've said it once, it all comes down to slaughter numbers. October, we backed cattle up in the north, made them bigger. The Packers asked us to. We listened. Cost of gain was cheap. Replacement feeders were high. You make them bigger. They filled the hole. We've been waiting for this November, December hole. They filled it. They got to come back and buy a few more to get through the Christmas ribeye demand, to get their primal needs covered. You got 2-3 weeks where we might see this thing stabilized here. I'm very, very nervous about Jan Feb. You got a fresh set of credit cards that need paid off. You're back to school. You got poor weather. I mean, it's very, very concerned about that. That being said, our tightest supply is coming first and second quarter of 2026. So if we could keep our slaughter increasing, get closer to that 600,000, maybe pop over it. The Packers are profitable right now. I think that's optimistic. We could clean some of these big guys up and maybe come February, March, turn the corner and possibly get some leverage back. That being said, in order to have that leverage, the consumer ultimately decides. We need to move the volume of meat. It's not all about price. It's also about volume. So if we get the volume flowing through the retail counter, through those restaurants, all of a sudden the Packers don't have a choice. They have to ramp up the kill, keep that high. Then they have to turn around and be aggressive out in the feed yards, out in the country, and buy more cattle. So there is that potential for the spring bounce. I don't want to discount that, and I don't want to be negative all the time, but give me a legitimate reason why managed money should come in and buy this with long staying power. I don't know. Placements could drop, and they could see that heifer retention. I mean, that's the thing. It's a big market. For every bull, there's a bear. You could make a case, and I'm not going to disagree with it necessarily 100%. But at the end of the day, the trend is your friend, in my opinion, and the trend has changed, and we're in a downtrend. Until I see new longs coming into this market, in those open interest reports every morning, I can't get wildly bullish. And if I had one fat steer for every time somebody told me that the fundamentals haven't changed, I think I'd be able to fill up that Tyson packing plant they just shut down, because it's very, very common. I'm hearing it everywhere. And the fact of the matter is the fundamentals have changed. It's all, like I said, prices at the grocery store, prices at the wholesale level, they haven't drastically changed, but volume has. Okay, so there's your change on your demand side. Not uncommon for this season, right? On the other side of it, though, we cut the slaughter at the wrong time. We backed up. We filled a hole. Now you got bigger, heavier cattle. The weights are proving it. Yes, we could get those cleaned up, but the fundamentals have changed. The potential's there for that bounce, and I'm really, really hoping and praying that we get that, because a lot of people need it. But the fact of the matter is it's the trend is your friend.
Yeah, definitely. Dan, are you ready for the government to shut back down in January again when they do this extension thing so we don't get any more cattle on feed reports?
shut it down for good. Fundamentally, green shut everything else down. We don't need it. My opinion.
I mean, we survived 40 days just fine, so
Nobody, nobody died. How did that happen?
I think there's probably a very large part of the population that would disagree with you on that, but I would be okay with not having a cattle on feed report this week. Like, I think we'd be okay with just pushing that a little bit further because, like you said, Samantha, trickle down effect of so much that we're seeing, right? Like, there is so we talked 5 days ago, guys. Like, we were just chatting, the three of us, and so much has happened. But Tyson plants shutting down in Lexington, which is such a massive impact to that community too, because I lived near Lexington for 2.5 years of my life. Like, Lexington was where we went to Walmart type of situation in rural Nebraska, and that is going to be a major impact to that community. So that is, I saw that and it's insane because I don't see the numbers backing it, right? Like, demand is still there, supply is still there. We have seen some lowering of things, but that's a whole nother can of worms. And then the Brazilian beef situation and just everything else that we've been seeing in the news, there has been a lot of push on this cattle market. I really wish that this was, so this is going out on Thursday, guys. To everyone listening, we're recording this the day before Thanksgiving. I really hope everyone listening to this, if you're listening to this on Thanksgiving, that you're having a steak or some prime rib or something like that. Like, throw that turkey to the curb. We all know Uncle Sam can't, like, not Uncle Sam, Uncle, what do they call him for Thanksgiving? Whatever his name is. Your uncle can't cook a turkey to save his life, and it's the driest thing on earth, and it probably tastes equivalent to the Sahara. So just put the turkey away. Go grab yourself a steak from the freezer. Go put that on the grill. Dan, I'll make you happy and I'll say grill. Go put that on the grill and have yourself a great Thanksgiving with beef.
There you go.
Dan, what are your thoughts on the Lexington plant closing down?
You know, we've not specifically us, but everybody in this industry has been speculating for the last 2 years when this was going to happen and which plant was going to be. You know, I think you and I specifically talked about it. My opinion at the time was we were going to shut a southern plant because that's where the tightest numbers were. Inevitably, they dropped a shift down in Amarillo. That's a big problem. The numbers are tight enough, though. The big problem exists if they don't bring that shift back on. If the numbers do start increasing with the border opening, the border opens, inevitably it all comes down to leverage. So Lexington was very, very hardcore. A lot of those cattle were captive, MAs, they had their agreements, formulas. So now you took cattle that were set for that, and they've got to go find a home in a different packing plant. So that causes another problem. Okay, so are those going to go to, Finney County? Are those going to go to, Platte? Are those going to go to, you've got a lot of choices. This is a good thing for, I would say, the smaller packers in the area or in the state of Nebraska, because we didn't drop one of those guys. Inevitably, it doesn't help us long term. From what I understand, it is one of the more inefficient plants Tyson owns. So that makes me feel like it's easier to swallow, but at the same time, messes with a lot of people's lives, and I think this has a very long tail on it. I would love to give everybody a ray of sunshine and tell them somebody's going to step in and buy it and reopen it, but I doubt it. Based on past performance with Tyson, it doesn't happen. So it's like I said, this could have a very, very long tail. We don't like losing kill capacity. Yeah, it's happening at a time not surprising because numbers are so tight, but actually next year, if I look at next year, I can make a case that there's going to be more feeder cattle available next year, next fall, next winter. All of a sudden you're increasing your supply pretty quickly. Now what happens? So we'll see how it all shakes out, but yeah, big loss for the cattle producers, long term, big picture.
Yeah. I mean, we've seen the stats. Once plants close down, the probability of them opening back up is so low. And so I think that that's what the concerning aspect about this is. Like, the stats are, the proof is not in the pudding there, right? Like, once plants close, reopening is not a super common thing. And so, yeah, it's going to be very interesting to continue to see how this develops, because I was just having a conversation with someone about it yesterday and I was like, I simply don't know enough about this. Like, we know what they've told us. We know what is happening right now, but how this is going to continue to impact the cattle market, especially like the feeder cattle market in Nebraska, where everything's going to go, how that's going to shift supply, demand, all of those things. Like, we don't know yet. We don't know until we're kind of forced to be in that situation and see just how the movement of cattle shifts and what happens there. So, yeah, definitely something to keep our eye on. Samantha, any other thoughts?
I think just expanding on what Dan said, the probability of someone coming in and running that facility is very low. I mean, we saw them close a Norfolk plant in 2006. They stripped it as a beef processing facility and, it still rots to this day. They're not going to sell it. I doubt if they do, I'm sure they'll put some sort of non-competitive clause in there so it can't operate as a beef processing facility and pose more competition to them. As we talk about supply and demand shift further into the year, like Dan said, maybe our placements go up. Maybe we start seeing the effects of opening that south border and they start to slowly trickle in. On the other end of that, I was in the camp that we were retaining heifers for the longest time if we had the means, if we could. But now I'm seeing more producers come out and say, well, prices fell off. We held on to these cattle too long and we aren't retaining anymore. We have to sell them off and get some sort of profit to be able to continue operating for next year. So we'll see what the effects of that are.
Yeah, definitely. Dan, what are your thoughts on heifer retention? I know this is something that you and I have talked about off and on quite a bit. And I kind of know where you were a few months ago, but do you have any updated thoughts on where we are just as far as heifer retention, herd rebuilding phases, all of that goes?
Simple for me. You talk to the fence builders and the veterinarians, and they'll tell you whether or not it's happening. And lately, up until this news last week, I'd heard a lot of it was happening. So how that shakes out, I've talked to a couple guys who said, well, I'm not selling my heifer because she's not worth two grand anymore. I'll keep her and make a cow out of her. And then I've heard the other side of it. I'm going to sell the heifer and I'm going to, buy back a cow in a year or two when the market's lower. I've heard both ways. Inevitably, I think part of the reason why our feeder calf supplies are going to jump next year is that dairy herd. You got the potential for another, 400,000 head of beef on dairy calves next year. I also think, a little off that topic, I also think cow slaughter ramps up in a big way next year. Your dairy herd, your beef herd, both got a year older. And to be honest, the consumers are complaining about the hamburger prices. Yes, steaks are high, but the hamburger is the one that hit the middle and lower class people. So throw in the Brazilian imports, throw in all a fresh set of quotas for all imports and throw in increased cow slaughter. You could see hamburger go down next year and actually steaks and all your middles, your prime will stay high. So it's gonna be a wishy-washy year to get through, but it's at the market.
It definitely is. It definitely is. Any other thoughts that either of you guys have as we kind of round out the podcast? Any other current events or anything else that we need to hit on?
Pick your brain a little bit, Dan, as far as input costs, especially on corn. Where do you think the grain market's going to go?
The guy in the background here, when he heard that, he just stuck his hand up in the air and pointed higher, but that's of course a guess from him, like the rest of us. Inevitably, there's a market that did the opposite of what livestock did. Low prices are trying to cure low prices. We've got a lot of good exports on the book. The basis is firming in a lot of places, and the spreads are narrower. If corn was a big problem, you'd see wide spreads and you'd see soft bases. So both of those things incline me to be bullish. Do I think it's a runaway market? No, because it always comes back to energy for me. So if I look at our administration's plan to keep cheap energy, it's hard for me to get bullish grains. There is a pop. I'm cautiously optimistic, thinking we could see a pop to that 470, 480, maybe 495 at the most. I don't feel like it's a $5 corn market, but I hope for the grain producers out there, I hope I'm proven wrong.
Yeah, definitely, definitely. It's an interesting time across all markets, whether it be cattle or grain markets right now, especially as we've wrapped up harvest for almost everyone right now, or at least if you're in Iowa and you still had any corn to harvest. I don't think you have any anymore, apparently, according to Dan. So both of you, thank you for your time today, for coming on and sharing just some insight and some thoughts into the cattle market and what is going on in the world of the industry, and kind of enlightening our producers on what they need to know, and that it's wild, it's volatile, and there's pretty much something around every single corner. I hope that the holiday maybe slows some people down a little bit, and next week when we're talking, we don't have quite as much to talk about. But anyways, to all of our listeners out there, if you guys need coverage, if that is a conversation that you want to chat about, make sure you check out the show notes down below, and you can get a hold of Dan, Samantha, or anyone else on our team to chat about what that looks like for you and your operation. Dan, Samantha, thank you both for your time today. And to all of our listeners, we will see you all on another episode next time. Have a good one, y'all.